Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition where our focus is on the Q3 earnings of 5-star business finance. Now remember, the company did post a net profit that's jumped 43.5% in Q3 to 216 odd crore rupees, and the total income for the company has again jumped about 46.5% to 570 odd crore rupees. We've also seen that the NII has seen a 36% surge on a year-on-year basis. That's come into the tune of 441 odd crores. And the net interest margins have come in at 16.8%. That's a slight dip when you compare it on a from Q3 of FY23. Now joining in to discuss more insights from the quarterly earnings as well as an outlook on the progress going forward from here, I'm now joined by the top management of the company. Rangarajan Krishnan, the CEO of 5-Star Business Finance, now joins in. Good afternoon, Mr. Krishnan. It's great to have you with us on Business Today Television. First up, tell us, how have you assessed the earnings that have come out for you in Q3? Have they met your own expectations? Which were the key driving forces that really helped you clock in a higher amount of profit this time around as well as an NII?
Thank you, Sakshi. I think Q3 has been an excellent performance all round, not just in business, but in collections as well. This is the first time we have crossed opening 100 new branches within 9 months in the same financial year. So it's all-round performance on business, collections, branch additions, and having one of the best asset quality. Also, this is the first time where our ROE numbers has grown almost close to 18%. We've always been guiding the market that over a period of time the NIMs will drop a little bit as the leverage goes up, but I think the ROA number is the right one to track. And we're as close to 18% as possible. So that's again shown a significant jump, vis-a-vis year on year.
Okay. Since you talked about the NIMs, the net interest margins, which have come in at 16.8%, slight drop from 18.5% that was seen last year in the same quarter. What is the kind of outlook that you can share on the NIMs going forward from here and a realistic band that we can expect over the next 2 or 3 quarters that the NIMs can pan out in?
So, I think NIM is affected by 2 fundamental reasons. One, if your margins in the business is going down, of course, it affects the NIM. And second, of course, if your leverage is going up, it also affects the NIM. So for us, fundamentally, there is no change in our margins. You can see our yields have been fairly steady and our cost of borrowings have been extremely well managed. So if you really look at our spreads, which we have disclosed, the spreads are at a very, very healthy level. But our NIMs are coming down because over a period of time, slowly the leverage is picking up, and that's also reflected in the capital adequacy ratio. We're still at above 50%, in terms of capital adequacy ratios. So we have been guiding the market that over a steady state, which is from 2 to 3 years from now, we would like to maintain margins at about 12%, spreads at about 12%, and NIMs at about 14%. So I think this 14 to 15% band in NIMs is a sustainable margins that we are confident of.
Okay. Sir, by now you would have deeply assessed the impact of recent announcement by the RBI, probably November end, on the unsecured loans, as well as they had taken a decision on the strictness that they want banks to have when it comes to loans that are given out to NBFCs as well. In this quarter, have you seen any kind of an impact of the measure that was announced by the RBI, maybe on your cost of funds?
Very marginal. Firstly, I want to clarify that we don't have any unsecured exposure at all. 100% of our book is secured by collateral. So we don't run any risk on that count. And secondly, almost 75 to 80% of our loans are given either for asset creation purpose or are for business purposes. So these are not consumer credit loans. So we don't have any impact on the unsecured or the consumer credit front that RBI has, dictated to all the NBFCs, except for maybe about 15 to 20% of the portfolio. But the impact for us will be where the risk weightages have been increased when bank is lending to an NBFC. So to that extent, there is some marginal impact in the cost of funding. But I think quarter on quarter, our cost of funding has hardly increased by about 7 basis points. And we expect still a little more to come, but not expecting it to cross beyond the range of 15 to 20 basis points.
Okay. Tell us, sir, on the asset quality front, which has actually seen an improvement, when we compare both on gross and net stage assets as well, they've both shown an improvement from previous times as well. What is the kind of room that you have? Do you see a further improvement coming in the coming quarters on the asset quality?
We have been guiding that the market over a period of time, slowly our current portfolio of the book will go as close to 90% as possible. And we've been showing steady progress over the last about 6 quarters. So, we are inching closer to 87%. So there'll definitely be improvements coming through in the next few quarters, wherein you will see the current portfolio of our company inching more and more closer towards 90%. But I think as far as stage three is concerned, we have been steady. We are in the same band of somewhere between 1.3 to 1.5%. And even this quarter, despite some unseasonal rains and weather impact that we had in two of our big states, we've been able to hold asset quality at an extremely good level.
Okay. Then tell us, on the credit demand when it comes on the ground, where exactly are you seeing improving demand coming through? And of course, this will be important for us to know because this will be the last quarter of this fiscal year that will be coming about. What are the trends that you'll be looking at for the upcoming quarter as well?
Yeah, I think there is no dearth of demand as far as this segment is concerned, because we are helping people graduate from, coming in from unorganized lending to organized lenders like us. Most of the people that we are catering to, our strong customer base are people who do extremely small businesses or self-employed individuals. And these people have been hitherto borrowing from money lenders. So in markets that we enter, market after market, we are disrupting the money lending segment, we are disrupting the unorganized segment and helping people graduate into more formalized lending. So I think it's a very large market. We are one of the pioneers in this market, and we have a great, opportunity to go and capture this market really well. This is more about an execution game. So there is no dearth of opportunity. We have been extremely careful in executing it, and we've also been guiding the market that this year we will grow by 35%, and we are comfortably above that. So I don't see an issue, of growth being a challenge in this segment at all. There is a lot of room to grow even forward.
Yes, I was going to come on the loan growth guidance itself. I think earlier you had given about a 30% or so. Are you upping that now to 35%? Did you just mention that?
Yeah, we had already upped it, not
Oh,
now.
okay.
I think we upped it about 2 quarters back to about 35%. So I think 30 to 35 is a reasonable range. This year for sure, I think we will see a growth of over 35%. But I think 30 to 35 is a range that we are comfortable for the next 2 to 3 years.
Next 2 to 3 years, a loan growth guidance of 30% as well going
Right.
forward from here. That sounds good, sir. Also, we'll be heading into the RBI policy tomorrow. Your own expectations with respect to the policy movement going forward from here. Of course, we've been seeing a status quo for far too long. Of course, a lot also depends on the macros that will be shaping up the world as well, where again there is a reluctance to go ahead and immediately cut rates. But what is your own sense with respect
No,
to policy move?
I think you have exactly voiced out what was there in my mind. My own sense is status quo for now, because RBI has been extremely proactive, in sort of taking the economy in a particular direction. But I don't think still the macros have settled. So there is still room to wait and watch. But I think probably we have reached the peak. But will it slide down immediately? The answer is no. Maybe RBI will wait for a little more build-up of the macros before taking a call on it.
Okay, fair enough. Well, good speaking to you, Mr. Krishnan, and thank you so much for sparing your time and explaining to us what the earnings have been like, the insights from the quarter, and all the very best to you for the upcoming quarters as well. And here's hoping for more interactions going forward too.
Thank you so much.
All right, with that, we wrap up this very special conversation with Rangarajan Krishnan, the CEO of 5-Star Business Finance, on a good set of numbers coming through for this quarter, as well as a promising outlook and a loan growth guidance of about 35% for the next 2 to 3 years. And of course, there is a room for further improving the asset quality as well, and a NIM that could be sustainable around 14-15% or going forward from here. Those are some of the key insights that we've got from the management. But we'll keep on getting you such interesting and important insights from the top managements of the companies that are listed on the stock exchanges, so that you can take an informed decisions of whether these are the companies that you would want to include in your portfolios too. Many thanks for watching, but do stay tuned. A lot more action to follow soon, especially when it comes to the expectations from the big RBI policy meet tomorrow, as well as on the closing trades too.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now.